The wrong way. I think I'm live. Pretty sure I am live. Yo. What's good? What's good? What's good, man? We are now live. Happy Sativa Sunday. Welcome to all my Sativians out there, man. Hope y'all had a great weekend. And welcome to Sativa Sunday, your favorite stock market show for fundamentals, macro, and technical analysis. I'm your host, Zay, the Wealth Strategist. And as I said, man, happy Sunday. So let me just tell y'all, all right? Before I kick off the show, I'm going to do a couple things. I want to shout out my chapter. And I'm going to shout out my LBs. We're going on our 15-year capiversary. So this past weekend, went down to Richmond and I was with my LBs. We went out, had a good time. I'm getting old, y'all, because I'm still feeling it a little bit. So I just want to shout out my LB, Spring Old Great, the A to Z chapter of Kappa Alpha Psi, man. Salute, man. 15 years in the bond, man. I love y'all guys. And so, yeah, man, I had a pretty good weekend. You know, as you can see, I did a little bit of studying this weekend. But as y'all know, as I mentioned earlier, I am on a 12-week program. So Friday actually marked my 12 weeks. So this week is like week 13, where it's really my vacation week. So I'm just about to be chilling. Plus, we just made it through a lot of stuff with the market, which we'll talk about tonight and kind of preview a little bit going forward. But yeah, not too much going on, man. Not too much going on. So let's get into it real quick. So, of course, got to lay out the agenda for you guys. So, of course, we're going to recap, you know, the things we talked about last week. You know, we had the FOMC decision that happened. We had a little bit of data that came out, and mainly what we'll just kind of break down was the FOMC decision and kind of the impact of that, right? And then, of course, we have we don't, you know, I guess we have like a few Fed members that's speaking. We'll go through the calendar, of course, right? Then we'll do a update on, you know, what's the narrative, right? And then we'll take a look at like what the technicals kind of are talking about. And you know, that'll be the episode for today. So it'll be probably pretty light compared to previous episodes, but you know, we're still gonna get it in. Now, a couple announcements right before we get it popped off. So, of course, shout out to my community, the runners. We have about 35 spots left before the group closes. So, if you're looking for a home, you know, link is in the bio. Come holler at us. It's a really, really great community. And then number two, got to shout out the sponsor for Sativa Sunday. So, let's go ahead and get them on the screen, right? So, shout out to Kaniba, right? So, it's a new company, right? They make hemp cigars that are healthier and more natural substitute for cigars made of traditional tobacco, right? So the company's mission is to offer customers a healthier, more organic substitute to conventional tobacco cigars by utilizing premium hemp and CBD. So no nicotine, no tobacco, no fillers, no additives, no THC either, right? So for those who asked last time, so no THC either. And if you want to go check them out, this is the website. I think they just came out with like a new flavor. And if you use code Sativa Sunday, you get 10% off on your order. So shout out to my good brother David Boone, and shout out to the sponsor Kaniba for today's episode. So now that we got that good stuff out the way, I'm gonna go ahead and holler at a few people in the chat. You know, if you make sure you tap into the chat, let me know where you tapping in from. Already laid out the agenda, so let me just go holler at a few people real quick, and we're gonna get this thing rolling. Y'all know I don't like to waste too much time, man. So we got Dave in the chat. He say blessings. What's good, my brother? Let me actually make sure I can set up my screens. We got Andres in the building, so my guy. Hey, yo, real quick, shout out to Andres too. So man, he actually is in my community. He stepped up. He's gonna be my YouTube moderator now. So we ain't gotta worry about no more craziness in the chat. I got my guy Andres, he gonna hold us down. You feel me? We got Trevor in the building, and I see King Braille, and I think that's pretty much all I see right now. So we're gonna go ahead and get this thing rocking, man. I know probably like I think it's in the college. Oh no, there you go. I was waiting for him. Oh, there go Jeremy. What's good, bro? What's good, man? He say, evening everyone, taking notes, plotting the moves for the week. Does the bank issues continue to drop us to 390? Or because of QQQ or bullish, do we see continuation to 409? So I feel you. Jeremy's always showing love. let me see. Let's say USO low to music, right? He say he twisting up. My God, what's good? And then you got Reginald is in the building. So shout out to all the good people in the Chizat. And excuse me. So let's get into it, man. Right. So last week I had a few guests on. So also shout out to my guest that was on last week. Shout out to P Dub and everybody over there in the shadows. Lex. Shout out to all those good folks. Shout out to Ahmed. And then shout out to my boy E. They was on last week's episode. Now, last week's episode was titled The Mask, right? And it was last week was all about the FOMC. And it was pretty much, how was as what Jeremy was talking, or was it Jeremy who mentioned it? Yeah, the bank issues. Yeah, it was Jeremy. Or, how was the banking crisis going to impact the Fed's decision, right? And then it was week 3 of the showdown, because after that, it's pretty much, how we, today's how end of the quarter, right? So we are about to end this quarter. We're going into a monthly close. And so that's basically like what the setup was, right? And so the hot topics last week was, of course, the banks. It's going to be the Fed decision. And then we did get some data on Friday, right? Now, let's break down real quick the presser, right? And let's talk about some of the takeaways from the FOMC decision. So ultimately, let me pull up some tools so that we can see what we're looking at here. Now, I'm going to go straight to the CME probability tool here. So this is what we're looking at for May, just so that I'm going to zoom in here just a little bit. Boom. All right. So for May, right now, the market is pricing in that the Fed will do nothing, that they won't hike. So 83% is at 4.75 to 5.0. That's where the current rate is at. And then you got 16% at 5, or them doing another 0.25. So already, man, it's like we already starting to show up with some disconnect here because all right, so let's talk about the pressure, right? So the first thing that we're going to say about Jerome Powell, right? The guy he changes the language from, or the Fed changes the language from ongoing rates are going to be appropriate to additional firming, right? And so the narrative around that is, did he signal that they are close to an end, or that the rate hiking campaign is about to come to an end? Personally, I believe so. Let's take the dot plot, right? So the dot plot outcome was that it didn't change. It did change. I'm sorry. So what didn't change was the 2023. So they remained at 5.1 as their terminal target rate, which opens the door for one more rate hike. And then for 2024, that did raise a little bit higher to like 4.3, right? Meaning the whole higher for longer scenario, right? And so that was some of the takeaways. We talked about the dot plot. I'm trying to remember all the highlights that we wanted to look for out of the FOMC that we had talked about on last week's show. So it was the dot plot, the projections, right? Oh, he did a 2.5. And it comes down, did he pivot? I won't say that he pivot, but did he signal that, the rate hiking campaign is coming to an end? Personally, I believe so. So we probably got one more. And that could be in May. So if we go look at when the next meetings are, and I'll pull up my board real quick. So let me remove that so that way I can get right to it. So give me 1 second. I'll pull up the meeting schedule so we can look at the FOMC meeting schedule, right? Here we go. Boom. All right, let me pull that up for y'all. All right, so we got the FOMC meeting schedule now. So this is, it ain't gonna go so much higher until I press that button. There you go. All right, so they got one. So now we done got these two out the way. Both of them been a 0.25, and ultimately from the beginning of the year, the market was pricing in 50 to 75 basis points. So when we get to May, if he does the 0.25, that gets you to above the 5.0 where they want to get to, as well as it hits their target rate. The question will be, and Dave said it in the chat, so I'm going to have to pull it up. The question will be, And he said the data said the Fed's mission ain't done yet. And I agree. So if you watched last week's episode, Dave blessed us with this dope tool where he was able to aggregate all of the data and information from Forex Factory and basically show us like, okay, what was coming in higher than expected, what was coming in lower than expected. And as we saw, actually, I got the daggone tool right here. I still got it up. So let me just zoom in. I'll make the point even more relevant. So as you can see, basically when it comes to the leading indicators that of inflation, 41% of them are still coming in higher. 23% are coming in lower. When you look at lagging, those are coming in higher. And, ultimately, everything is pointing to that the Fed still has more work to do. And so, ultimately, after the FOMC and like what we talked about last week, was, where is that going to leave the market? So when you think about after his presser, I'm sorry. Before we say after this presser, one more thing. No rate cuts. That's another. Let me add no rate cuts, right? So they basically asked him, hey, the market is pricing in rate cuts at the end of the year. And he said, look, we don't see rate cuts as our base case, right? None of us see that. We don't see it. So another disconnect in the market that opens that door to, okay, when we go look at the market. And so now that we basically kind of recap last week and recap the takeaways from Jerome Powell's meeting, because that was essentially the highlights, right? It was essentially, hey, they raised it by the 0.25. They changed a little bit of language signaling, hey, we went from ongoing rates being appropriate to additional firming. He mentioned that the terminal rate didn't change. That was a big thing that I was looking at. So the 5.1 stayed the same. And then we caught the part of the no rate cuts. And then there might be one more rate hike, and it's going to be probably a 0.25. And then it's looking like they're going to probably pause or whatever they're going to say. So as we get ready for quarter two, right? And at this the end of the quarter, that's one thing I think, that, will play its part as we go into quarter two. So it'll just be something to watch, right? Hold on one second. Let's see, I got a text. Yeah. Yeah. Yeah, let me do that right here. Oh yeah, it's about to get good, bro. I'm gonna go ahead and do that. And give me 1 second, y'all. About to get a guest on here in a second. One moment. I'm pausing in the middle. I feel bad, yo. I should never do that. Okay, but good text. So might have somebody be joining in a second, which will be good. Damn, I done forgot where I was at. See, Dave, you done got me off track, bro. I think I was recapping the Powell takeaways, and damn, where was Dave? So Dave texted me on, and now I done forgot where I was at on my damn thing, where I left off. So I'm gonna just keep going. Pointed to higher for longer, yada yada yada. I'm just going to go to my Schwab Traders Weekly Trader Outlook. So let's go take a look at this, because I think I was almost done making the point anyway. So I was about to come here anyway. That's what I feel like. So quarter two, right? That one, actually, I remember now, I was saying that was an impact that we had to watch and play out, and that was one thing that was going to continue to play out. And I was about to transition right to this screen, so I was still on chart. So of course, Charles Schwab, they're back with their Traders Outlook. So, I love to look at this. And I really want to go and look at the review, right? Just to kind of add on what were additional impacts. Because like we said, we had the banks, we had the Fed decision, but there were some other things that also, kind of played out. So we know that quarter four earnings season is over, and that we're about to get ready to go into quarter one, right? And I want you all to know that that's kicking off with the banks. So I'm going to keep iterating that. It kicks off with the banks. About mid-April. And when you think about all that stuff that just what happened and what are they going to say about forward guidance, that's going to be real big. So that right there is going, quarter two is definitely going to kick off with a bang when we start hearing from them banks. So just watch how they trade over these next couple of weeks and going into earnings, but that's coming up. So let me talk about the data that came out. So not only did we get the Fed decision, but here was some of the data that came out. So the recap was that we had existing home sales that was better, right? And then we had initial job claims that came in better than expected. We also, what came in worse was new home sales for February, and then durable goods. Now, this is probably the biggest one because durable goods contributes to GDP. So the fact that this was worse than expected, we want to see how does this impact GDP? Does GDP go down as this continues to go down, right? And then this is SPI. Oh, there he goes right there. My guy. Yo,
what's good, man?
What's good, bro? How you doing, man? Welcome.
I'm doing all right, Don't want to interrupt your vibe right now.
No, honestly, bro, man, I'm gonna keep it rich, man. Tonight, I was like, listen, man, where I'm at with it is this is more of just like I feel like the quarter is basically done, right?
Yeah,
you know what I'm saying. Like we had all of the big events that we kind of been waiting on play out. So now I feel like we really is going to like go into a digestion period. You know what I'm saying? Of what the question is, what do we do next? And to be honest, I really don't know. You know what I mean? Like, and it's so much stuff out here. So I was just like, look, we just gonna go through the information and let the data, speak for itself and just see where the chips lay. And, so going, I always have good questions that we can take home for homework. But like right now, at the end of the quarter, right, Dave? This is what's been leading the market, right? So we got communication service has been the best sector. So that's Meta, that's Google. You know what I mean? You got tech is right behind it, and then you got consumer discretionary. Now, mind you, let's point out those were the worst three performance sectors. So the question, begs is this just a big relief bounce, or is this a serious ride? I mean, these things have some pretty down percentages. So for them to bounce back like that, that's like, that's expected almost.
Right? Yeah, it looks like a dead cat.
Yeah, it could be, right? Could be. Then you look at the middle of the pack, you got industrials kind of just lagging, and you got materials, you got consumer staples, you got real estate and healthcare and financials, utility, and the energy is doing the worst, right? You know what I'm saying? All the defensives are, if we're supposed to be going into a recession or whatnot, you would think defensives would be leading. Yeah. So the market has been very deceptive this quarter, right? So, at the end of this quarter, and I'm glad you joined because one of the things that the reason why I type like Wall Street consensus got it wrong is because, bro, remember at the beginning of the quarter, when we did the outlooks, most of them was like, yo, we were supposed to crash the first quarter. Most banks was like, yeah, we're gonna go to 3,200, within the first quarter. If not, if they didn't say first quarter, they was like in the first half of the year.
Yep.
Now it's like a lot of them changing their tune.
Yeah, they're beginning to call bluff on the feds. And I don't see a reason for that because they're basically thinking that the banks are going to do the Fed's job. So that's where bank earnings is going to be real pivotal to see, hey, are they going to be being more restricted with lending? How they're going to do with capital management? Are they going to do the Fed's job, making sure that there is no higher demand for money supply?
Mm-hmm.
So...
No, yeah, I agree, brother. And then so just kind of like wrap it up. So that's just sector performance, right? Mm-hmm. Then we got year to date. So we got 2000. So for 2000, the S&P is up 2.8%. We got the Nasdaq killing it, up 12%. And you got the Dow down 3%, and then you got the Russell down 2.4%. So and then you look at the PEs, right? So the PE is at 18. You got the Nasdaq at 26. You got Dow at 16 and then Russell at 22. This is the main one that's relevant, though.
Yeah, Russell's pretty high.
Yeah, that one too. You know what I'm saying? So, it's like valuations. I won't say they aren't as high, but they're not cheap. Mm-hmm. You know what I mean? They're still not cheap. And so, they got that. From their technical outlook, all I really want to point out and just kind of have, the viewers know tonight is when I use this information, just key on the numbers that they, just keep these numbers in mind. So what Charles Schwab is using for their 50-day is 40.13. They 100-day is 39.61, and they 200 is 39.32. And then they got their low at 35.77 and 40, and they bull market at basically 4,300. So they, then they kind of give you this chart. Then they go through a bunch of option volumes. I'm gonna skip over some of that stuff, and then this is the economics reports we'll go through. All we really got is PCE, bro. Again, like this upcoming week, I mean, like maybe this could do something. Who knows? But as far as real data, I mean, or how do you feel about GDP for Q4?
Yeah, that's the final GDP. So, I mean, you already got two revisions that came behind it before it, so that should be a nothing burger right there.
Yep. And I just read this line. This report typically causes less market reaction than advanced or
Hmm.
preliminary. So, yep, to
Yeah,
that. But really, it's going to be about PCE this week, and then it's interest rates. And then for their outlook, stress and anxiety in the banking sector continue to drive volatility. And it indicates that we'll just see more in that directional uncertainty to come. So, like, even they don't even know.
yeah.
You know what I'm
What's
saying? Oh, but
what's that?
here's the good part, right? While the Fed said it would not cut interest rates, the futures and bond markets indicate the cut is now a very real possibility. Time will tell if the banking sector will force a premature Fed pivot, and then they go through some outlooks, but they just say, hey, with no clear directional bias, the logical outlook for next week's is volatile overall. Well, that's very helpful. Thank you.
So they're basically saying just take a position in VIX and just chill. I'm just reading between the lines right there.
Right. I don't know though. You know what I'm saying? I don't know. But so yeah, so that was kind of just again to kind of take a look at the week ahead, what we got coming up this week, man. And Dave, man, for real, bro, I'm glad you joined because I was telling my wife, I was like, bro, I really this episode, I just feel like, bro, like I said, we kind of hit the end of our quarter, right? So we kind of, we chilling. And when I look back, it's like the monthly is about to end. So it's like, let me just see how this monthly candle end, right? Let me see how this market goes at how does this play out? What does this look like? And then when we go into April, like then it's like you can start to really assess what's going to happen because we know in 2 weeks. Well, what's crazy is in April is that a lot starts to go down, right? So that first week we get the NFP and stuff, but right here this week, if I'm zoom in a little bit more so they can see. This is the week we
Yeah,
get
the 12.
CPI, PPI, retail sales on Friday. And this is the week that banks kick off earnings.
Yep.
So it's like a double whammy that week.
So what I'm thinking is that a lot of these institutions, they're basically going long, right? And then they're finding short positions. And the reason I say that is because you look at stocks like Nvidia now, that has a very good narrative behind it, because it's a stock that it plays a huge role in the AI. We know how big AI is going to be to transforming just every single industry and sector. It's just there's no way around it. I mean, we see it right now.
Yeah.
So Nvidia is a big player to that. So if you want to invest in that space, you get into Nvidia, right?
Yeah.
Yes, the stock is expensive. It's been rallying all freaking year, but it doesn't really look like there's any real pullback. Like it's pretty much around that, above that 265 range. So once it breaks that 260, like see where you go left, that one more candle.
What you talking about, right here?
Yeah, no, just one more candle to that left. That
Right here?
yeah, that one right there. What's the open and close price for that?
The open close 251 and close is 243.
243.
Yeah.
Yeah, so we're still above that. What's the high on that one? There.
269.25.
All right, so that's pretty much where we're at right
Yeah.
now. So that's what I'm watching, that level, because we start breaking that. We should basically see that body to that red breaker right there that fell to your right, which is, I think it's
Right
April.
Here.
Yeah, the April candle.
April 2022. Mm-hmm.
Yeah, so with that, and it's not selling. Like we don't really see, it's not volatile. Although
Oh yeah,
Thursday and Friday.
That's a monthly. Just
Yeah.
like this is what a weekly. I mean, yeah, it's on a out of this is January 2023. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Out of the 13 weeks, it is up 12 of the 13.
Yeah.
No, one down week.
Yeah. So they're going long and they're finding like little short positions here and there to kind of find yield, because that's what you're going to see at the end of the month, right? End of the quarter. So every quarter you're going to have that rebalancing, and the rebalancing ain't necessarily happening during quad witching. Sometimes it's happening a couple of days before that. That's why that Thursday before quad witching is volatile, but it really follows through to the end of the month.
Yes.
Right. So that's another reason why this month is going to be volatile, is because we still see some rebalancing actually taking place. Now, the reason why they're taking a little bit longer now is because they're paying attention to the Fed and all the data, right? And so when's the 31st? Is that Friday?
Yeah. So the
The
31st
last
is
day.
it's the last day. The last day of the month is the last. It's the last trading day. Yep. So it's going to finish the monthly candle.
All right, which is interesting
We
because that
actually futures right now too. So we up right now. So
yeah,
we definitely
yeah.
we gonna gap up tomorrow. Well, I
We
don't
haven't
know.
seen too many news basically, to sell the market
Over the
down.
news, yeah, it wasn't.
Yeah,
Nothing came out crazy about the bank. So
yeah.
yeah, it's gonna be interesting. See how we close the month. I mean, for the month, we are gonna be up. We're gonna be positive. So if we go for a positive close, so this is kind of how I'm looking at it too, though. If we manage to close, man, this monthly close above 40, 78, you right. Go long, cause boy, we probably going for 4,300.
No, I think they're going long and playing short at the same time, but they're very selective as what they're playing short in. Like energy,
Yeah,
they're short energy,
yeah.
and in this macro environment, it's kind of weird because energy should be doing okay seasonally because demand is beginning to pick up. In the spring, we also had a colder winter because now uh, weather is basically shifting, right? Weather pattern. I think you mentioned that early on in January, saying that hey, we're getting later winters and there's spring. I know it's a little warm now, but hey, anything can happen. So, from the strategic reserves, we're beginning to see
So tell me,
replenishment.
yeah. Go ahead, I'm listening.
Yeah, so I think they're beginning to short that. But the interesting about Friday being the last day of the month and the last day of the quarter is that Friday is also the day where the Fed's um, most preferred inflation reading comes out, the PCE.
PCE. Mm-hmm.
So if I'm putting all my cards out there, right, I'm a smart money institution. I'm trying to figure out exactly how to position myself. I'm looking at like, all right, what did I capture all the data, right? Which companies are going to be the least impacted by a rate hike if there's any? Like I need some confirmation, right?
Mm-hmm.
So there's nothing really slowing the market down until we get that confirmation. So which means that we can probably trade sideways or might even rally into a technical resistance until we get confirmation from the PCE whether inflation is really cooling down,
Mm-hmm.
if it's moderate or it's higher than expected because the Fed Powell basically said that hey, we're not done yet.
That's very true. I mean, again, being that they keep saying that they're going to be data dependent, and I think I mentioned this on one of the previous episodes. I was like, yo, that's what's like, and I think it was the episode when you mentioned like we might be just going sideways to the next FOMC. And I feel like that's basically what we've done. Like, and I mean, there's individual names that have, you could have played and done well, or whatever the case may be. Once again, we talked about that too. It's like it's probably gonna be better just being individual names, but like we said, if they're gonna be data dependent like that, it's gonna suck because it's you just waiting for every report to kind of like feel like, all right, what's the market gonna do? Now I gotta wait for this report, and then you gotta wait for that.
Yeah.
And yeah, so again, it's almost funny because I feel like I won't say the advice, but the things that we would, tell someone is almost it's stay consistent, which is just like, you got to be patient, keep your head on a swivel. You know what I'm saying? Pay attention to what's going on, how they move in the narrative, because things are shifting so fast, man. It's crazy out there.
Yeah, but what's the real theme of 2023 has been lately? There's been two themes that have been really running the market.
Let's see if there's been two things. I'm trying to think.
I
I
just
think
mentioned one of them.
um
I just mentioned one of them.
I know the Fed is one. So I mean,
No. Just think outside the macro.
You saying outside the macro?
Mm-hmm.
You talking like AI?
AI is one of them, right?
Yeah,
That's why all these
AI,
right?
yo.
Meta actually has a huge play in the AI space. So does Google, right? When you look at communications, right? XLC is the best performing stock. Well, that's because there are a lot of stocks that are tied to AI. And then when you look at a company like BuzzFeed, right? BuzzFeed basically said, hey, we're getting rid of our writers and we're going to use AI, which CNBC has been doing that since the damn pandemic. If you look at those headlines. But so that's one of them. And the second is regional banks failing. You look at
Oh yeah.
KRE, right? You look at KRE, you look at
Ooh,
all
let's look
these
at that. Yeah,
regional banks.
man, that thing came down. I'm gonna go to the
Yeah.
monthly.
Phew, that's scary.
That thing down. Oh,
And XLF too, right? Yeah, you're
yeah,
good now.
I think so.
Yeah.
Oops. Nah, I messed up. Now I'm good. All right. Yeah, that's on down 30%, bro.
Yeah.
That's tough. That's tough, man. And I don't. That's gonna be a. That's I wouldn't touch that.
Yeah.
I'm just gonna say that.
And you know what's crazy thing? Because we last year, I think we had the runners basically were looking at KRE for a long position because of raising rates. Regional banks pretty much do well if it's gradual and they still get the same amount of loan demands for loans, right?
Mhm.
Because the Feds were going to remain aggressive, raising rate, KRE would have been the perfect short position. Just something
Yes.
that just
Actually, and that's what happened. We
hindsight.
was just like that. John just went sideways. We was like, man, it's over. Like it
Yeah.
ain't. Like something in that thesis is broken, and now we know what it was.
Yeah.
You
Yeah.
know what I'm saying? Now we know what it was, man. Now we know what it was.
So those are the two themes. So if that's a theme, until you get confirmations or these data reports that the Feds are looking at, those are pretty much going to be your trades.
Well, let me say. Well, let me ask you this, right? So, in nature of the today's show, right?
Mhm.
And when we think about even everything we just kind of talked about that happened over this quarter, um, the market is still positive for the quarter.
Yeah,
Like
it's
you know what I
crazy.
mean? It never really went below 3,800. Um, so when you think about that, the market has been very resilient through all of the craziness. And I'm like, are we gonna experience more craziness in quarter two? I don't know.
That's hard to say because
Right.
when you
Yeah.
look at it, man, and who knows? I don't have a crystal ball.
Yeah.
I'm not gonna speculate or guess what's happening. But what I'm saying is that when you look at like what's in front of us,
Yeah.
you got you got earnings, right? Earnings haven't been stellar. A lot of
Yep.
companies actually were very conservative with earnings and revised down, even though they were basically sandbagging last quarter because of all this risks, right?
Yep.
So when you look at that, yeah, there was 70% that was beat, but when you look at revenue, right,
Yeah.
earnings per share is basically based on the price, but like revenue is really what matters, and
And the
that
revenue beef was low.
it was pretty low compared to historical. So that
Yeah.
means that the market is still expensive.
Yep.
So that's something to watch out. Even earnings per share, when you look at it, basically the average is still pretty low.
Still pretty low.
So you think the market would have been negative because the quarter from earnings standpoint wasn't that stellar, and then you got the whole risk with. Well, we still got an ongoing war. We still got some macro things that we're trying to work on with inflation and supply and demand that hasn't been resolved yet. Yet the market's still up. I
Yep.
mean, yeah, you got individual names like a couple of train companies that people are easily able to short
Yep.
because of some accidents. Right? It looks like they're pulling into the same companies. Is let's short the companies pretty badly that are performing pretty bad and go along with the rest. There is no day-to-day strategy right now because we're just in that loop. So find a really good company that you can hide your money in.
Yeah. 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 Well, you know what?
Mhm.
Here's something I was looking at. And when I look at and it fits right into today's theme, the sectors. Bam. I was looking at like the year to date leaders.
Mhm.
So set the tracker, and I wanted to show this as year to date. So this right here, if y'all don't know this website right here, is sectorspdrs.com, and it gives you a breakdown of all the different sectors, and then you can kind of like go in individual see the companies and stuff like that. So it's a dope website. So it basically iterates what we was just talking about from the Charles Schwab article. However, on this side, you can see like who's been performing here today. So if we just look, Nvidia is number one. That joint up 83% this year, bro. Busting my ass. But it's on, it's on the right shit. Then you got Meta, right? You got Tesla, you got AMD right behind it. You got Warner Brother Discovery, which is no, but $9. I don't know how, probably whatever. You got Alliant, you got Salesforce, you got two healthcare companies, right? You got First Solar, GE is somehow up 40%. I think that might be one of them spinoffs. A whole bunch, or you got Arista, then you got, I don't know how that XLF is still up 38%, but that's that company. And then you got a few others down here. And then we look at who's our worst. Well, of course, all the banks, all the regionals probably the worst now because they just got shorted to the ground. But before them banks, it was really Dish. I wouldn't even say Charles Schwab. They love Boston Properties. Let's go see if we got anything. It's a lot of healthcare. Pfizer down 21% on the year.
Yeah.
So I mean, it's honestly, I feel like it's just been all it's been all tech, bro. Let's keep it a buck, man. There is when you talk about what's the strategy, it's been all tech, man. You know what I'm saying? And yeah, they just been
AI.
You know what?
AI.
Honestly, it is AI, but here's another perspective. Is when I think about energy being down, it's not so much of them shorting energy. That could just be profit taking.
Profit, yeah.
You know what I mean? It was up 59%. So that 11% this 11% that energy is down, that money is now rotated into tech, XLC, discretionary. What was up good last year? That's kind of like just a lot. All these sectors here, basically all these here that's down. That money is going right into XLC, XLY, XLK. And as you said, as we prepare for like this next quarter, and getting ready to go into Q2, whatnot, getting ready for these next 12 weeks, man. I'm really excited to just let this week progress. Like you said, let PCE come out and see what happens because there's going to be we are looking at opportunity because the last time we did like a quarterly or openly review, we had this data, and then over the quarter it played out, which was in the beginning of the year. We saw that these were the worst sectors, and we was like, hey, you might want to look at tech and all that because it could possibly rally. And damn it if that shit didn't rally, right? So now it's like, okay, when you think about Q2, like you said, when we think about what we got coming ahead, you got earnings season mid-April. What is that going to look like? What is guidance going to look like? Especially when you're expecting GDP to go down, you're expecting unemployment to go up. You shouldn't probably be expecting too much of a rosy guidance or earnings, right? And then after that, you still have to find out what does inflation look like, right? We're going to have to see how persistent or what does that look like. And then we'll have two decisions, May and June, if he's going, continue to hike. We still got to, I would say, reconcile the no cut situation. Yeah. At some point, that has to reconcile. Like either the Fed is wrong or the market is wrong, right? You know what I mean? Like the Fed is saying he got to cut. He's saying I'm not cutting. Who going budge first?
Okay,
I think so that right there will be that's going. I think that will have will impact the market whenever that reconciliation happens.
Okay, so let's talk about inflation, right? That's what the Fed really cares about. And this is like I call common sense reading of inflation. Just go outside, go out in a restaurant. Is a shit pack, right? Its price is still going up for a lot of things. And this is not leaving like grocery individual item. It's more like, hey, for me to be able to enjoy and go out, is that cost me more than it did last month or last year, right? So those are the kind of things that you want to see because everywhere I've been so far, and I do travel a lot, it's people's been out and about, especially if the weather gets warmer and so forth. I still see people buying and stuff like that. And what's going to slow that down?
Nothing. But while you was going through that, I wanted to pull something up that we had access to here. So I don't know. Hopefully y'all can see that. But when you started talking, as you were going through inflation, I want to pull something up. So this is a guy we got from JP Morgan. Shout out to my guy Jordan. But There's going a little bit in depth, and so what he was breaking this down to us, right? And he was showing how like they tracking it, so we actually can get a good gauge of CPI and the control. So to your point, right? Restaurants, right? Look at that right here is this blue bar, and because the question I asked him was that I said, how do y'all see inflation coming down to like 3, 4% by the end of the year? Like I'm like, how? Where does it? How does it happen? And then like he really like broke it down into. So one of the things you have to know is that shelter, right? So I'm about to get y'all some good shit here. So the
Go
shelter,
for it, man.
the shelter was that they take surveys from like the Zillow in the apartments and stuff, but then when it comes to homeowners, it's literally like, yo, what you think you could get for your rent? Like, you know what I'm saying? It's not, there's no real prize, like no real, so it's, trash data, trash output. So the
Mhm.
shelter part is a little flaky. What was the other one that he kind of broke down for us? Oh, food. So food, right? And I was like, okay, I don't see food prices going down. To your point, right? Well, then he put us on game and was like, go to FAO, yeah, right here. So the FAO.org. So it's the World Food Organization, right? And then he was showing us if you go to this food price index joint right here and you go down, you can see, and I'm gonna zoom in, that actually food prices or this index right here, food price index, it peaked like back here in 22, and it's kind of been going down. Like it was 159 in March of 22, and since then it has been going down. I was like, okay. I mean, this is good data. All right. And he was like, so if this is still the trend, and you have meat and stuff like that, food going down, then that's another contributor that over time. And I'm gonna go back to that guide. What was that tab at? Yeah, he was saying over time they can see food going down, and then of course used vehicles. They hope that's going to continue to go down,
It's
and
gonna go
then
down.
energy going down. So like, yeah, he gave us like a whole breakdown of basically how you can see that coming down to 3% by the end of the year because of the shelter part, right, and how that is kind of calculated. And if we get a housing bust or whatever, eventually you're gonna start to see prices come down. You'll see start the rents go down. And he was saying like that part. But yeah, so this is a pretty dope resource right here. And so to your point, CPI, bro.
Let's talk about housing for a second, right?
You said housing?
Yeah, let's talk about that for a second.
Yeah.
Because one of the things that drove housing prices up was people working from home and relocating, right? There was a lot of relocation that happened in 2021, early on 2022. Folks leaving one job for another. They were basically getting them more flexibility. Companies were going out of big major cities like New York and LA. They were going to smaller markets, right? Well,
Yep.
people are taking those salaries, they're making those big markets, and they're inflating those prices there in those smaller markets because, like, if I'm buying a 2 bedroom shack at and this is a house, like a small house in LA, I'm probably paying close to like 700, $800,000 for something real small, right? Well, you could take that money and go to like Memphis, Tennessee, or one of the suburbs outside of Memphis, and be able to buy yourself something, close to a damn near mansion for that same amount of money. And they were keeping that same salary. So that's actually what was happening because people were bidding those houses cash on hand without even seeing because they were just the square footage alone. They was able to kind of stretch their money more than where they moved previously from.
Mm-hmm.
So now when we look at that now, are we seeing people still moving around? Is there still that demand? Is that narrative really playing?
Mm-mm. No, I mean
And
I'm not seeing it.
I want people to start doing some more research, really paying attention, talking to realtors, and really see how many people are coming from outside the area, out of state, and actually buying the local area out. Because what you'll start seeing is natural norm or reverting back to the mean, where houses start coming down overall. Because you don't have people bidding up because of people are local. Everybody knows the value of the houses. They're like, hey, listen, I lived this place 5, 10 years. I know the value of the houses around this area. I'm not paying 2, 3x for it. So So that's the thing that people start paying attention when it comes to inflation.
Yeah.
Now, the only thing that's really creating uncertainty is what the Feds are looking for. Like, do the Feds have this foresight, or does the
So
market have the right foresight?
that's the $1 billion question.
Yeah,
You know what I'm saying?
yeah.
But something that's relevant, I seen a question, and we just hit like 45 minutes, so you're not trying to keep it to about an hour. So I'm gonna start going to the chat, see if there's any questions or anything. But I feel like because you were saying like the inflation part and the housing, kind of this question kind of ties into that with, she said, but when will the consumer begin to feel that? And I'm assuming when she say when begin to feel that, I'm assuming the impact of
Inflation or deflation?
yeah. I would say yeah, you might have to clarify that for us. Begin to feel what? You talking about inflation or deflation?
Because there are deflation happening now. We can see it coming around the corner, right?
What
Like
would you
housing, I
say?
see housing coming down.
You said housing prices are?
Yeah, I can see housing come down. I don't see. I can't see housing coming back up unless there's a rate cut. Then that's when people will start acting foolish and be like, you know what? Because of my mortgage is going to be down lower because I'm going to pay less interest. So I don't care what the face value of the house is because I'm
Yeah,
going to overall pay less.
yeah.
So that's the only time I actually see housing come like reverting back up. Other than that, other areas, it's all tied to supply chain. The question is, has transportation gotten better or worse? Has inventory levels in a lot of companies, are they still high and they got to get rid of them off their books by actually discounting them? Or like a Nike, which they reported in the earnings that there's an opportunity that they have to continue with their discount,
Mm-hmm.
or or inventories, healthy or scarce, and people gotta buy shit and don't care at what price.
So to that, right? I want to do one last thing with this graph because I just realized something. I just saw recently that used vehicle prices are starting to go back up.
Hmm.
So as I'm looking at this, something that was very high and now that has started to revert and going negative is red, which is new and used vehicles. So if this starts to creep back up, that even that's just a pointer, a bip or two that could also create some issues with inflation. So
Okay.
I would definitely watch that used vehicle market because from what I'm hearing, man, the car market, it seems like it's from what dealers are saying, it's like it wants to implode, but at the same time, it's like no cars and people still want cars, and so
Okay.
it's weird.
Yeah, that's a follow-up question I was about to ask. Like, what's the inventory for new cars? Because that's the only reason why used cars will go out is if there is no new cars that they
So
are
yeah,
consumers can
so
go
I mean,
after.
not very. I mean, how many new like models that have been produced? I really is not had a lot of because of the chip issues, right? And then they had the
Yep.
production issues. So like a lot of models like didn't get produced. You know what I mean? So yeah, she said no new cars on the lots, or somebody just said no new cars on the lots. Yeah, it's hard to get a new one. So that's
Gotcha.
going. But I just wanted to bring that part up because I noticed that was negative, and I just saw that the prices were starting to creep back up. So it's going to be an interesting quarter, man. Definitely going to be an interesting quarter, bro. If we go, just and then as we just go look at like just some technical stuff real quick. Um, these was the fibs that I did in the beginning of the year, bro. And when I look at where we are, or what we've done so far this year, literally sideways. And I feel like I've been talking about fucking 3998 since since I wanted to since the beginning of the year.
That's
I was like, yo, that was like the first time I was like, yo, we might have tried to run up to here back in January. That's where I thought the target was for the relief rally, and I thought that's where things would end.
you know what's crazy? I'm looking at your 50% retracement. We've
Yeah.
basically been hovering around that 618 level and just
Mhm.
been chilled out there. Or
Yeah, man.
we haven't really bounced between two fib levels, which is kind of interesting for a quarter. Like this is when you look at it span a quarter for us to stay relatively within that one fib level.
Mm-hmm.
That's basically saying there's a lot of indecision happening. So the
Oh,
market's really digesting a lot of things, or they're just kind of rotating it systemically
I mean, for sure, bro.
or
I mean, the numbers,
systematically.
the data speaks to it. We
Yeah,
have, the three sectors that weigh the heaviest are carrying the weight: XLY, tech, communication services. Without that performance, clearly, I mean, we can already see the outperformance when you look at, say, the Dow. This is here's the Dow, right? Same thing. This was my yearly fibs that I did on it. So the Dow telling you it want to come down, but then
yep.
you look at the Qs. Ooh, the Qs look like it's going the
Doing its
other
roll.
way. That thing going the other way. And then what does that leave? Where does that leave SPY? In the middle of the road. You know what I mean?
Spots above that trend line
It is.
there.
It is. But to me, I mean, man, I can get rid of that because at the end of the day, what I just see, and I was talking to Tim about this, and then I just see sideways.
Yeah,
Literally since whatever month this was, June 2022. We kind of poked out once here in August. We poked out here in September and October. But other than that, the market has stayed between this 377 and 415 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Almost 11, all going on. It's probably going to be 11 months because, goddamn it, April is most likely, you know what I'm saying? We've been going sideways for 11 months. And when this thing does decide to break out whichever way, it's going to trend. It's gonna trend in that direction. Yo, this dude Eddie, funny. He said it's all coming down. Hey, Eddie, I'm
we
glad you
don't know.
because I remember Eddie called out the Apple 120. It ain't going too good for those brothers. Apple's still doing this thing, man.
You know what's crazy? Because Apple just released a statement about their smart glasses, saying that it's going to take a couple of years, and they're going to take the same playbook that they did with the Apple Watch.
Oh, really?
Yeah. So, what new revenue stream does Apple have currently? If they're not going to, because that was beginning to get priced in.
I don't know, bro. I mean, they services though. I mean, I guess that's Apple's the best company. It's well, Tim Cook is
Oh
a
yeah,
great. He'll figure it out.
yeah,
Then you
yeah.
got King of Dreams. Put up Buffett is buying up all the oxy. This is does this indicate oil will go up soon? So that was something I wanted to ask you because I know you follow oil, you big on oil, and actually you mentioned the SPDR, but we kind of like just kept going. What I wanted to say was looking at oil. Remember, it finally broke down and got under the 70, and I think it was you who told me that under 70 they wanted to start buying.
Yeah.
So
That's
clearly they definitely started buying, and there's that floor. So so I guess to King of Dreams point, we go look at Oxy and just XLE in general. What was the worst? It was the worst performer this quarter, right? Down almost 11%. So this is like a quarterly chart. So do we see it bounce next quarter going into spring and summer when driving season come around? More demand, because more people are driving stuff. Is that a case for oil? Not only oil, but is that a case for XLE and oil companies to bounce here? Kind of like it's breaking down, but it came back to some structure. So could this be just a pullback for another pop? Who knows?
When I look at the quarter candle for 3 months, it's an inside candle, and even I was gonna say you can even keep on that view. You can see it's inside candle because when you go back to that, what was that? The weekly that you were on?
Nah, that was monthly.
A monthly.
Right. Yep.
Yeah. So you see that strong green candle right there.
October.
We're just right into that price range there. Longer we don't break that low.
Yep, right here.
We're good. Even go to a weekly and go to a daily. I just want to see how strong that candle is.
It's a gap here.
Yeah.
A bunch of gaps. So yeah, they gonna come fill that.
Yeah, they're trying to fill that gap there. So probably put alert and see what happens.
I might have put one right there because I think they're gonna swipe this low. They might try to swipe that low. I'll put one right there.
And that's not even that much percentage, right? That's only $65. Oil actually just traded sideways for a while.
From where it goes, nah, that's actually a lot, bro. So if you for XLE, where it's at, if it goes down to 74, that's 4%.
15%, right?
The 68 is 11, and then to the 65 is like 15, 16.
All right, that's a correction.
Yeah, for sure, for sure. Um, and so
What could happen with bank earnings? I mean, I still I don't
look at
think there's
XLF.
anything good that's going to come out of bank earnings unless you're a JP Morgan.
Right. So that's what I was gonna say. Like when you think of, and we had this conversation, the last bank earner is going to depend, like, you know, saying the consumer banks, the big four probably going to make you okay because they got hella deposits. Like a Bank of America. Honestly, I kind of have my eye on Bank of America. I ain't gonna lie, because even though it's breaking down, it can be opposite. I'm looking. It's a straight trading opportunity, right?
Okay.
But yeah, going into earnings season, like it came back, it hit the 200 for me. I'm gonna just, like I said, I'm gonna let this week play out. I'm gonna let this monthly finish. But going into April, if they getting beat down so bad, and if things turn out to be like, we can get past this. The ones that won't be affected will bounce back, like a JP Morgan. I mean, you go look at it, like JP Morgan. I mean, even if I had to go safer, I'd maybe not do Bank of America, but JP Morgan still at the 50 day.
Yep.
You know what I'm saying? But that was a hard fall. So
the reason I said kind of watch out for Bank of America because they are subject to the Hindenburg report. Now, the only company that really got like hit hard was Square or Block because they were like 15 or 20% of those fraudulent claims that Hindenburg said that was coming out of PPP loan. 80-something% was Bank of America.
Oh, damn.
Bank of America just got better lawyers, from what I've heard. On PR
well, look at Square though, bro. God damn, dog. That thing sideways. So yeah, that's Square.
That's an opportunity to go long if you want to go long.
The futures market changing a little bit here. See, that's why I was like, you can't, get too excited too early, man. Definitely. Well, we got some rejection up here that we had went all the way up to 3996. Okay. Overnight trading, man. It's gonna get late. We're gonna see, man. We're definitely gonna see, Dave, man. But I don't know, man. You got anything else, bro? I feel like that, honestly, what I would just, or go ahead. Yeah, if you got anything.
Now I was gonna say this week is pretty much gonna be a lot of chop until Friday. So it's something that you want to watch out for. There's some individual companies that have earnings that I'm watching out for, but other than that,
what is earnings this week?
Just some small companies, basically almost like virtually penny stocks that I'm looking at that have really good management. I went to like a robotic automation show last week. Met a lot of good folks, and there were some companies that are public or tied to these public companies that I'm watching, but they're
small.
So, yeah, they're small. I ain't gonna really publish them out there, but
I think not. Yeah, we good. Yeah, I agree with you, bro. Like what I was gonna say is, man, like I said, today I was, I'm glad we just kind of took it easy today, chopped it up, just some basic talk. We gave people some good info, things to look at. You asked, I'm gonna drop the link in there. Where that's on that. So drop this joint. All right. There's one food joint.
So you gonna tell people what you were drinking last night?
Yeah, man. I was lit. I mean, I told people, I said I was,
you were having fun, man. 15
look,
years with your brothers.
15 years, bro. You know what I'm saying? 15 years, man. And me and my LBs, we don't link up as often. So when we do get together, it's usually on that occasion. And then, what I'm saying, with kids and stuff now, bro, I don't get out at all. You know what I mean? So it's like, well, I got a night out. I'm going to have a good time, man. So, yeah, man. I was on that Crown and Coke, though. I was having a good time. But now, what I was about to tell people was, like, for this week, man, and just, honestly, for this week, like I keep saying, it's the end of the quarter, right? So it's the end of the quarter. Be mindful of that 2 days point. It's gonna be a lot of chop because you're gonna see people probably taking profit. They're gonna be wanting to book profit for their quarterly books or whatever. Mm-hmm. They're gonna be kind of rebalancing. There's gonna be, there's a lot of funds and ETFs that do rebalancing the last week of January, or I mean of March, right? For the quarter. And so
Yeah.
they're about to repositioning and getting ready for the summer and stuff like that. So, you know, to the runners, man, look, this is we on vacation. This is week 13 for us. We chilling this week. You know what I'm saying? We ain't really got to do nothing. We could just chill. But after that, we get ready for the next 12. But I would just tell for the folks who not on the 12-week program, this is a good week to just study, really break down what are the opportunities, like how we talk about what are the narratives that's driving the market, right? So Dave gave you a couple of those. What are the things to the come? How can you best position yourself? What companies are going to benefit? I saw that about to happen. Like what companies that are about to benefit, and be strategic, right? Don't overtrade, be patient, and just take it one trade at a time. You know what I'm saying? You don't got to rush, especially this year. You don't got to rush, right? Because man, it's tough trading out there this year, man. So you really got to make sure you pick your right moves. But I would tell people to just be easy this week, man. Don't try to force nothing. It's the end of the quarter, so expect some crazy, swings. If you're a scalper or a day trader, y'all gonna have fun. So I know, Dave, you might get busy a little bit.
Yeah, just a little.
Yeah, but other than that, man, that's pretty much all I got for y'all tonight, man. So that being said, man, hope y'all have a great evening. Dave, I appreciate you joining my brother. Till next Sunday, y'all stay blessed. Peace out.
Peace out.